You are live. I love it when it says that. I love it when it says you are live. I don't know why. I just like that. All right. Let's get over to the charts, guys. What is going on? Let's clear everything up here. We usually start off in the metals market, right? But I wanted to check in on the S&P real quick because we are in, at least on the daily chart there, we are in this extended trend. Go out to the 4 hour. 4 hour still has some room to go. Look at that daily chart. Look at the daily chart on the S&P here. Let's open this up. I mean, every single one of these TrendCloud signals really brought us right to the top. Understand how TrendCloud move. You need to understand how price action moves inside of TrendCloud, okay? Because it's inside of these pockets here. It's inside of the TrendCloud where price moves to, okay? Impulse up, correction. Impulse up, correction. Went sideways, corrected back into TrendCloud. Impulse up, correction back into TrendCloud. Each time pulling back into the TrendCloud, okay, until another one here, until you get extended. All right, so we can draw it out. We can draw that out, and you can see, how do we, you used to be able to, I guess you can't do that anymore. Okay, well, that's what it would look like. Okay, that's how price moves inside of your TrendCloud system. Drop down to the 4 hour chart. And, you know, on the 4 hour chart, you can see the movement of the daily chart. And on the 4 hour chart, look at where those lines are. I mean, you can still see what the pattern is. You can still see the pattern here. Pulls back pretty deep, right? 4 hour chart, that pattern looks like it's pulling back pretty deep. Where's it pulling back into? On this 4 hour chart. Now, go like this, right? Doesn't quite pull all the way back to that demand zone, does it? But it comes pretty close. How about here? Again, not really pulling back, right? It's not really pulling back to the demand zones, right? It's not really pulling back to those demand zones. Doesn't always do it. Isn't that frustrating? Right here, where did this pull back to on the 4 hour chart? Looks like it missed that demand zone. All this is consolidation here. That's all consolidation. Here you're getting it now. So this is just an exercise in drawing out those, okay, here, drawing out demand zones, right? And then finally here, doesn't quite pull back. So only a few of them worked. Hey, good morning, Frank. Good to see you. So that's just a lesson in price action and identifying demand zones that actually, worked. So you want to be able to draw that stuff out. Opens higher, softening inflation. All this news is going to come out. Let's take a look at the Nasdaq and see what are they all talking about. Go out to the daily. The Nasdaq is even more. The Nasdaq is even more extended on that daily chart. Even more extended on the daily chart. We didn't quite make a new structure high on the Nasdaq. We broke above the high for a little while, right? So I would say all that there. Okay, on the daily chart, that's definitely your market edge. There's your market edge. And right here, you don't have to get crazy with it, but I would draw it out like that. Okay, now drop down to the 4 hour. Well, what does that look like? Does that look about right? I think so. I think so. If you drag this back, zoop, you draw it out just like that. So drawing out your demand zones is pretty on the highest time frame. You just want to encompass, all the support levels, all the resistance levels. Where does it hit the most? Where does all of this start to hit the most? And that's pretty much how you draw your curve. I never really liked the term the curve. I really like saying market edge. Curve is so confusing. It's really not the best word to use, right? That is something that was taught at Online Trading Academy. I never quite understood why they called it the curve. But I like market edge. Now everyone uses that technique. There are other schools of thought in trading that do this. So the technique is sound, but I just prefer to call this a market edge rather than a curve. Support, support, support. So the idea is now what you've got is, an understanding. Well, we're really close to the market edge here, right? So this is all resistance up here. Do we want to continue to go long when we're so close to resistance? So what you would have to do, and we'll focus in on this area here. Let's draw that out. Drop it down to the lowest time frame. Okay, and just scroll back. So take a look at the 15-minute chart here. Comes into that market edge right here, pulls back to the trend cloud, makes a new structure high, pulls back into the trend cloud, and double tops right here. It does not make a new structure high right here. It does not make a new structure high. Instead, what do you see on the 15-minute chart here? What does it do? It breaks below the trend cloud and breaks through structure. Right there. That becomes your signal to start looking for opportunities to go short. And what do you get? Well, you get some trend cloud signals here, right? Kind of goes sideways until it breaks down. And here we are again, hitting that area. on the 15-minute chart. So doesn't seem to be going past this purple line that we just drew. That's pretty cool, right? I mean, that's a very simple observation. That's a very simple observation. So if you're looking at this with nothing on your chart, you know this is the market edge. And on that 15-minute chart, you see that first pattern, that structural candlestick pattern of reversal. That's very important to see, right? Here's your high, pulls back, forms a new structure high. You'll remember in the masterclass when you get TrendCloud and you're going through the technical analysis class, make sure that you pay attention to that new structure high, new structure low, break above, close above. All of that stuff is in your coursework, and very important to understand, because the when you have a new structure high, meaning you broke above previous structure. Hey Gary, how you doing, buddy? Good to see you, man. Break above that that previous high and closes above. So it has to break above and close above previous structure right here. See? Here's previous structure, break above, close above. Once you have a break above, close above, you just have to assume it's going to do it again. And if it does it again, you have to assume it's going to do it again. Now, how many shots at this do you usually get? Well, that's on your TrendCloud system as well. And there you go. You usually get 5, right? Here's one. It pulls back, right? New structure high, pulls back, new structure high. TrendCloud is going to count everything for you. As soon as it becomes extended, it'll color the candles blue. And now you can say, okay, we're probably, we might get one. It's getting there, Oh, no worries, Gary. Knee replacement. Oh, no. Oh, boy. All right. So that's about a year of recovery there, isn't it? I used to work in a physical therapy for a physical therapist. Now, that's not fun. Well, let's get some consistent profits. You'll have time to sit in front of the computer now and heal up. So bad is good and good is bad, right? Take advantage of every opportunity to to focus in on something when you have the chance, when you have the time. And why not get good? Why not perfect a technique? Why not perfect a technique that's useful? So drawing this stuff out, you really get a feel for it, so that when you look at anything, let's take a look at the Dow. $15-minute chart on the Dow. We'll do the same thing. Let's go out to the highest time frame. Okay. Let's go out to the daily. The Dow is just starting, right? It's just starting to become extended here on the Dow. Just starting to become extended. Candles are turning ice blue on the daily chart. Dropped out to the 4-hour. And again, I mean, you can see, look at this. I mean, pulls into TrendCloud on the daily. Nice move out. Pulls into TrendCloud. Nice move out. And then kind of goes sideways. Look at that gap up. That is nuts. That is just crazy. Drop to the 4 hour. Very nice double top. You see how you can you can look at this stuff from like the top of the mountain. You know, you can look at this stuff from a real eagle eye view, and then zoom in a little closer. So we went from the daily, daily chart, 4 hour chart. Aha, there we go. There's your double top. Okay, goes a little bit higher, but does not, right? It does not break. It does not close above. We just get a little bit of a break above, don't we? Here's your TrendCloud line, right? Previous high breaks above the previous high. It doesn't close above though. So we didn't get a new structure high. We just have this double top. As soon as you get a new structure high, you can't call it a double top anymore. It is just simply a new structure high. So this is officially a double top on the micro Dow. Can we take advantage of this? We've got to break through a little bit of structure here, right? On this 4 hour chart, we've got here and, basically here. And that is a long way down. So let's see, 916. Maybe if we get a breakout on the opening range back up into here, we can capture some type of bull trap, right? Let's start looking at the Dow here. There's your double top on the 4 hour chart. We've boxed it out. It's also a rally-based drop. 1 hour chart, very nice situation on the 1 hour chart. Look what we've got. We are breaking below negative 100 on CCI. Okay. Cycling down, breaking below the trend cloud, extended trend, right? If price decides to come back and retest this area, we've got to be all over it. We've got to be all over it for the short. Is it going to 100%? Is it going to work 100%? We don't know. We don't know. But you can't let that stop you from taking the trade. Whoops. So very good position. What about momentum on high time frame? Yeah, there it is. We're setting up for a really nice short here on that micro Dow. Cycling down, high time frame. Momentum down, high time frame. Right? It is in an uptrend, but we've got the double top here. It didn't form a new structure high. Okay. So you've got to we are replacing the fact that we are in an uptrend with the fact that we're in a double top. Okay, and we're saying that's just as good as a downtrend. Extended on the 1 hour chart. Momentum below negative 100, right? Also cycling down. So we really are setting up for some sort of pullback into this area. 15-minute chart. What do we have here? Let's turn everything off, and there you go. There we've got a really nice. Look at this, guys. Drop base drop right there. Okay, really nice drop base drop there. How expensive is that? That is the very first level, right? So we can even put it like this, above all that structure. It's not even $100. Look at that. Kazi, good morning. Look at this setup. Micro Dow, 5 contracts. We could afford 5 contracts on that micro Dow, and it's less than $100. That's a nice trade. So what we're asking for is a pullback into this area here for the move down. Will we get it? I don't know. I don't know. But that's a real nice setup here. Opening range. Okay, we do have a level of resistance up here. What is that? Go out to the hourly. Oh, that must be a monthly. Let's see. Previous month's high. Okay, that makes sense, right? Previous month's high. Let's put those ADR checkpoints. So this does have, oh, okay. So look at that. We've already hit that second ADR checkpoint here. This could work in our favor. So because we've hit that ADR checkpoint already, we might, I don't foresee this going any further down, right? Could be that this slows down and then we start to creep back up here. And then one of these points here, hopefully somewhere inside of the supply zone is where we'll get, this thing creeps back up to here. We're really looking for this, right? We're looking for this, but we don't know. Maybe it wants to go to this one. We don't know where inside here that's going to hit, right? But we do have, a drop-based drop. We've got this whole thing right here. You guys see that? Little consolidation pattern here. Finally, drop-based drop. We are right above that, right? $92, right? $100. Let's just say $100 even, right there. 5 contracts, $100. Set it and forget it. We don't know what's going to happen, but we were lucky enough to find it early on. Lucky enough to find this thing early on. Oh, and look at that. It did. No, that's Sunday. Okay. Sorry. It kind of looks like it hit the first ADR checkpoint here, but that was yesterday. Oh, nice. Yeah. Yeah, Turtle Trader book. Yeah, it is. Yeah, pretty interesting. Which one did you get this one? Did you get that one, Kazi? This is the one that Curtis Faith wrote. And he was one of the turtle traders. Yeah, it was really interesting. Very interesting. Good. Yeah. I like this one the best. There's a couple of them. This one I like the best. I thought it was the most interesting. It was just really cool to, man, I totally would have wanted to be a part of that. Wouldn't you? I totally would have wanted to be a part of that. If I saw that in a newspaper, Richard Dennis put a ad in the newspaper, calling all traders, or something like that, people from all different backgrounds. That would have been really cool to learn, from somebody like that. And that's what it's all about, It's all about, because they definitely, I don't know any college that teaches, trade technical analysis. But yeah, it's really cool. Learn from somebody like that. That's what it's all about. Learning from different people who have focused in on something, I think we do some pretty unique stuff here, in TrendCloud. Not too many people use the ADR, and it's become very useful. Trend following, trend reversals. You just have to learn from different people and sort of put it together yourself. You learn from everybody, and then you take that info, you put it together yourself into something that makes sense to you, and then that's what really works the best. Small loss, massive profits. Yeah. The whole idea, Kazi's saying, like, that whole idea, follow the rules with an edge, right? And then small loss, massive profits, right? Yeah, absolutely. Yeah, that asymmetrical leverage, right? Then you go over to your pal Larry Height, right? Mr. Larry Height from The Rule. You switch over to that book, and that's what he's talking about. He's talking about that. He's talking about that asymmetrical leverage, that he looks for. Oh yeah, risk manager. Yeah, sure, Gary. Let's all use the risk manager here on this Dow trade. So, indicators, invite only. There's my risk manager. Click onto that. This little blue thing comes up here, says that you're using it. And what you do is you'll take, whoops, sorry. Hold on. Let me do that again. Grab your risk manager, right? Click this thing off like that. Okay. Now you can move this thing back and forth. So your first line is the vertical axis, right? And what I like to do is I like to put that, at the end, at the very start of my box that I boxed out. Click once. Now this one, the first horizontal line is your entry point. So let's put that right there. Click. The second horizontal line is your stop loss. So let's put that right there. Click again. And now you've got an account balance, say 20,000, 1%, whatever you want to put there. Hit apply. And then there you go. So this is saying I could have 9 contracts, right? It's $183. So in fact, let's do it. There you go. That's how you maximize your potential. Okay. If you, so that's it. All right. So let's do it again. Gary. Are you following? So you go to the chart, Gary. Go to the chart that you want to put your risk manager on, right? And then engage the risk manager. Click onto risk manager. This little blue box will pop up. And then, Gary, just X out this thing, okay? Now you've got a movable vertical axis here, right? And, you know, this thing, you just put it close to the area that you want to box out. Okay. Click to put it into place. Now you've got your horizontal line. Horizontal line. Click where you want your entry to be. Second horizontal line, you click to where you want your stop loss to be. This box comes up and says, okay, tell me how much is in your account. Maybe it's $10,000. I don't know what it is. You put whatever that is, and you say, I only want to risk 1%. Maybe you want to risk 2%. You make those adjustments. Hit apply. Okay. And there you go. Puts it on the chart. And that's it. You can adjust this now, your targets, and say 2 to 1, 3 to 1, 5 to 1. And that's just inside of your, you know, the little gearbox thing here. Yeah, no problem. Make that large. There you go. 2 to 1, 3 to 1, 5 to 1. And we'll just leave that up there. And it'll give you the little profits and let you know what's going down. 9:30. There's the open. Here's the 9:30 open. If you turn your risk manager on now, okay, turn on that risk manager, and you'll see the yellow line has just formed, and we're getting some reversal candles here. See, we've come into this consolidation. We'll leave that alone and see what happens. We don't know if this is going to work. It might break through everything and go here, right? So the idea was, we didn't go the full. We didn't go like the full 1% here, because we said, well, maybe we want to take a couple of shots at this thing, being that it's a pretty wide zone. You don't know what's going to happen. You can take the full 180, or you can reduce your risk, right? We said 5. So now you can take a couple of shots at this, right? Because in our trading chat, and we rolled back the clock, right? Today's Monday. We set everything back to 0, or to 20,000, right? We're starting the new trading challenge today. So new trading challenge, we did 12%. We did 12% in March. We did 24% in February. What is April going to look like? Let's just continue following TrendCloud, right? Just continue following and doing what we're doing, and we should be in the green again. So here's the first trade that I'm looking at here, that I'm setting up. Let's check out crude oil. Oh my goodness. What the heck is that? Let's take a look at crude oil here. Okay. Crude oil double topped here. Okay, so here's the 4-hour chart. We're cycling down. Momentum is down. Okay. But we're still in an uptrend, and that's why we're getting a little bit of confusion here, right? What we want to try and do is capture the impulse, or capture the correction, from here to here, right? We want to try and capture that correction into that high time frame trend cloud for the move up. But so we have, you know, we're in a corrective phase. Momentum is down, high time frame. Okay, can we use that to our advantage? We still have an uptrend on the middle chart, and unfortunately, CCI is still above positive 100, right? We've just pulled back. We haven't broken below negative 100 yet. So that leads me to believe we're going to continue to see something like this until we do get a break below that 100. Then we can start looking. So you've got mixed signals here. And we like to identify mixed signals as quickly as possible so that we can filter those trades out, right? So we don't really have what we're looking for to set up the trade. 15-minute chart went extended, pulled back, recalculated, and now it's trying to break back above. So we do have two uptrends here. And the 15-minute chart has recalculated, and it's trying to make a decision now. It's trying to make a decision to either go higher or continue that move down. We're sort of in limbo. Natural gas. Okay, natural gas, downtrend, right? Let's get rid of this. Focus on one chart at a time here. Definitely in a downtrend on that 4-hour chart. Breaking above trend cloud. So we've got this deep pullback. We got this deep pullback taking place on the trend cloud. Here's what I'm seeing. That is this thing right here. I boxed that out just like that. Let's take the full basing candle there. Rally, base, drop, 4-hour chart. Market edge. Look at all the resistance. Hit, impulse down. Pulls back into supply zone, impulse down. Pulls back into supply zone, impulse down. Okay, this is a real solid piece of resistance here on that 4-hour chart. What did it pull down into? Let's see. Nothing. Go out to the daily. Nothing. All-time low. All-time low. So there's really no structure back there to look at. So we're going to have to draw it on this one. How about like that? Or like this. We'll draw two of them. Make that green. Oh, what happened? Does that make sense, guys? This is, look, here's where all the buyers came in. You know, if you're ever confused about what to draw, like, oh, should I draw it like this? I mean, you can, but look at where did the change take place? Right in here, right? Here's where look, this candle broke through structure here, and hasn't quite made it back up to here yet. So a lot of buyers came in here. 4-hour chart, cycling up, momentum is up. 1-hour chart, same thing. So we've got this massive pullback with a lot of momentum. Very, very difficult, you know, to say what's going to happen when we get back up here. With all that momentum, very difficult to say. Can you take a small risk on this? Yeah, you can. Let's see if there's anything up there. You can try anything you want, you know. So there's a 15-minute supply zone right there. There you go, right in there. But when it gets up here, trend and momentum will be against you, right? So, you know, if this pulls back into TrendCloud, or it pulls back to retest here, let's box this out. What's the story? You know, we just have to tell the story of the charts, right? We are still in a downtrend on the high time frame, but we're just starting to break above. Is this the start? Is this the beginning of an uptrend? In which case, why would you want to go short? So because this is the area in question, we have to use it as a target, right? Momentum is up, cycling up. Momentum is up, cycling up on the middle time frame as well. This is the beginning of an uptrend on your trend cloud, and you've got momentum at your back for the upside. It's on the chart. It's telling you that's what's going on. Okay, so you got to think to yourself, we're just starting to break above the trend cloud here. Okay, that means this thing really wants to turn into an uptrend. And momentum's on our side. Okay, that makes sense. We're already in an uptrend on the 1-hour chart, and momentum is on our side. Why would you want to go short just because this is a supply zone with all that other information against you? That's really the big ticket item here, you know, and that's really the big ticket here. That major piece of information that most people ignore. Now, again, is it a supply zone? Yeah, it's a supply zone. We don't like to just take supply zones, right? I think you guys have tried that in the past. I think if you just try to take every supply or demand zone, you might not like the outcome. So the idea is, why don't we start taking very specific supply and demand zones? Well, what do you mean, Chris? Well, why don't we start taking supply zones when we've got momentum on our side, right? Let's take the pullback into this or a supply zone when we've got CCI below -100 and high time frame momentum is down. You know, this thing is red. So as of right now, because we have all this upward momentum and we're breaking above trend, what are we looking for? We're looking for this right now. We're looking for a pullback into a demand zone. How great would that be? What if we pull back, you know, into this 15-minute trend cloud and then get a signal and then get a trend cloud signal? Then we can take it from here up into this questionable area. We don't know what's going to happen up here. We don't have enough information. But we have a lot of information on this move, right? We've got a lot of information on this. From here to here, we've got plenty of information on that. So, you know, all of this comes down to, let's take trades that we have the most information on. TrendCloud is also 50. Yes. Yeah. So I'm calling 50% fib area. Oh, nice. Oh, okay. Oh, right on. Good call. Swing low to swing high. And yep, right there. So Kazi is pointing out that on this 15-minute chart, if you take your if you take your Fibonacci retracement tool, swing low to swing high, look where the pullback is, pulls back, there's that 50% retracement level. Here's 618. So 50% and 618, they're right inside of that trend cloud. And what do we usually look for? Right? Pull back into trend cloud, make that next move up, right? Do we have a formation anywhere? Let's see. Recalculate that. Not really, right? It's just kind of, I mean, we got this stutter step here. We've got these two weird looking candles here, right? Doji, nice bullish hammer here, candle. Where is that in relation to TrendCloud? Yeah. Okay. Now put your swing low to swing high. Okay, so the formation is a little bit lower. How about ADR? So it looks like that 50% retracement level and that ADR checkpoint. Yeah, so we've hit. So there's the other issue, isn't it? Look at what we've hit today on natural gas. We've already hit 1, 2, 3, 4 ADR checkpoints. Holy cow. Is this going to go any higher today anyway? We don't know. So we're kind of on the we're definitely on the pullback here. And then it'll probably go sideways for a while. Yeah. Starting to reject. Does it pull back and then go through all these ADR checkpoints again, we don't usually see that, do we? We don't usually see that. But everything else is pretty sound, right? I really like that pullback into the 50% retracement level right near TrendCloud, right? So from here to here, make that a little different color green. Yeah, we hit those ADR checkpoints. So I think we might see real slow kind of action now on that natural gas from until tomorrow, you know. Okay. Well, natural gas is pretty expensive too, isn't it? It's pretty expensive stuff. I'm gonna buy one. There's your $200 full gambit, you know. That's a $200 risk. That's pretty pricey. It's pretty expensive. And being that we already hit those ADR checkpoints, you know, I don't know. How much information does your brain need at this moment in time to take that trade? That's the question, right? That's what's going on here. We've got that real nice trade set up on the micro Dow. Oh my god. Oh my god. Exactly. Yeah. Yeah. Not the perfect situation. And what you got to do is, if it doesn't look like it doesn't look quite, you know, I don't know. You start saying stuff like that to yourself. Move on to something where you look at and you're like, oh wow, look at this. Like that's what you want. That's the reaction you want out of yourself, right? The reaction that you want out of yourself is, holy cow, oh, look at this. Look, this is all lined up. This looks great. Yeah. Yeah, that's what you want to those are the ones you want to get in on. But woo, massive move to the downside there. Let's see. What's it looking like on the opening range? $15-minute opening range. Just breaking out to the downside. So this would be, we're asking this thing, you know, break to the downside and retest all the way up here. I don't know if that's going to happen. It's kind of more like break to the downside, retest at the, you know, here. Retest at that area. Would that make sense? It would. It would. Here's, you know, here's the break of structure, right? Previous support becomes resistance. Here's that little base drop. Capturing that momentum. This would actually be a better area, right? Because if it connects back with this supply zone, let's say it wants to pull back to the previous day's open, look at on the 1 hour chart what that looks like. It looks like a continuation of the downtrend, right? We're below the 50%, we're below the 50 simple. Comes back. We're going to retest this area here. We're going to retest that area. all that consolidation, right? And then the move down. So you got two areas here, really. You've got 2 points here. So maybe we take $100 shot, at this. What am I on? 4 hour. A lot of resistance left. Previous day's low, previous day's open, previous day's close. Inside of the opening range, right? Right, there's the opening range right here. So we got some levels, man. We got some levels to look at. If it pulls back to any one of these supply zones, we've got momentum on our side on both the middle time frame and high time frame. We're at the very beginning stages of a downtrend on the middle time frame. So we don't have the trend with us, but we've got momentum on both time frames there. Very possible. How much is this? Sell 5. Real. Yep. So, if you set it up like this, here's a supply zone, right? $100, $100. If both of these fail, so we get, this is how you have to look at everything, guys. Okay, we want to try to get in on this, right? With what we see here, we've got a very viable supply zone here and another one here, $100 each. So you're saying, okay, I'll risk $100 on this one and $100 on this one. If both of them fail, that's only 1% of your account, right? That's how you have to look at everything. You got to look at everything as, okay, if I take this trade and it doesn't work out, will I be in a terrible situation? That's what you got to ask yourself. Trading is all about how to not put yourself in a terrible situation. That's what it's all about. So this would be, this would be a very nice risk, right? You can be real exact with it, put it right on that previous day's open line. But the retest into this area, okay, whatever, $100, take another $100 risk on this area here, less than 1%. And that's what you got to figure out. That's how you have to organize everything. Lay it all out like that. Let's see. What happened with gold today? All right, here's the opening range on gold. Okay, so we have 2 uptrends. Momentum is against us. Mixed signals, right? You've got down momentum on the high time frame, upward momentum on the middle time frame, cycling up on the middle time frame, cycling down on the 4-hour chart. The only thing that we've got in common here is the uptrend. Uptrend, high time frame, uptrend, middle time frame. Everything else, mixed signal. What are we waiting for on gold? How about a retest or a new structure high into that seventh wave, right? 5, 6. If we push up again, we'll have 7. So right in there. We break past this, we'll have a 7th wave. Right now, this is following the momentum. So it's a bunch of mixed signals, and that's okay. Let's wait for those signals to be in alignment with each other. That's it. That's all you do. That is what TrendCloud gets you used to doing. It gets you used to filtering out your trades and thinking through everything. When you've got a system, when you have an organized method of trading, and that method is objective, now you can walk yourself through each time frame and say, well, we're in an uptrend, so that means I'm looking for longs. Where do those longs usually take place? Well, it usually takes place somewhere inside here of the trend cloud. Okay. How close are we to that? Oh, we're still pretty far. That's all the way down here. Momentum is still down, so we might make it to here. And then what do we have on the high time frame? Well, or the middle time frame. We got rally base rally here. That's also right. That's also 50, right? That's also the 50 simple, right? So we've got this, we've got that support level, and you can draw this stuff out and you can see, well, if we get down into this area, and you know, here's where we have to make a decision. How did you get yesterday? How did you get yesterday? Close high. Yesterday's close high. Well, what do you mean, Gary? Oh, previous day's close. Previous day's close, Gary, that is on your open range tool. See how it's flashing? When you put your open range tool on the chart, go inside of the opening range tool, Gary, and you'll see daily, weekly, monthly, right? Opening range. So you've got the daily, previous day's high, previous day's low, open, close. And if you wanted to turn that on or off, you could do that. So it's really all customizable. This right here, Gary, show only one previous open, high, low, close. Make sure that's checked. Otherwise, you'll get a whole bunch of, you'll get all of them on the chart. So you make sure that's checked. Show only one previous open, high, low, close. And you will see right there, that's previous day's close, previous day's high, because those are the values I want to see. And it's going to show me daily, weekly, and monthly. And if you wanted to turn those off, you can just go off. Maybe you don't want to, you don't want to see the monthly and the weekly. Just turn those off. And now you'll only see the daily open, high, low, close. And there you go. Let's see how it reacts off of this previous day's high. Oh, and look at that. Previous day's high, little 15-minute demand zone there. Nice demand zone, right? Drop base rally, previous day's high. Seems to be bouncing off of that, giving it a little bit of... So this demand zone has an uptrend on its side, cycling up. We still have the momentum with us, right? This could turn around. We're just we're against the high time frame momentum. So what are all the things that we have going for us with this little zone here? Number one, middle time frame uptrend. We're cycling up and we've got momentum on our side. We also have the high time frame trend with us. That's a lot of stuff. That's a lot of good stuff with us on this demand zone. What's going against us? Cycling down, momentum down on that high time frame. Couple of things against you, couple of things with you. We like it when everything is with us. This could be very short-lived, right? Because we don't have that high time frame momentum. Breaking through, right? Gave us a little bit of, got a little bit stuck there, and now it's breaking through. Where's it heading? Maybe it wants this stuff down here. And you can see by the time it gets all the way down here, we'll probably, momentum will probably be against us. And what would we have to wait for? We would have to wait, gets down here. We'd have to wait for it to, here. We would have to wait for it to do something like this. When we see this pattern on the low time frame, we can see on here, up, there we go, right? Break above positive 100. We're cycling back up. Momentum turned green. Got that hook up on K maybe. Because it is trying to get back to this. The context of this trade is on the 4-hour chart. Cycling down, meaning it's correcting. This is a corrective move into that high time frame trend cloud for some move up. So we need to see on the lowest time frame, we need to see this pull back into here and do some kind of a, make some kind of a higher low, right? Here's your low. Here's your higher low. There's your break of structure. Move to the upside. Start looking for those pullbacks that look like that. All right. All right, guys, top of the hour here. Good lesson in structure today. Good lesson in structure. Review of the risk manager tool. Previous day's close. Remember, all of that stuff is on your opening range tool when you put that on the chart. And it gives you a lot of really nice areas, to take a look at. Well, now it's starting to bounce off of that, right? So a lot of that stuff short-lived. We've seen that happen before, right? Kind of breaks through the demand zone, pulls back up. The idea is to see everything in alignment to take the trade. This is all about filtering out the trades that have trend and momentum on your side. If you've got trend and momentum on your side on the high time frame and the middle time frame, you've got yourself a nice trade. And that's the art of getting good at all this. So Gary, when you're sitting in, healing up your knee, sitting in front of this chart, that's what should be going through your head, trying to perfect your scanning abilities, right? Do I have trend on the 4-hour chart and the 1-hour chart going in the same direction? Yes. Okay. Do you have momentum on the 4-hour chart and 1-hour chart going with you? Yes or no? And if you do, then you can take the trade. If you don't, then you go look for something else. It's as simple as that. You keep it that simple. Do I have trend and momentum on my side in this trade on both the 4-hour and the 1-hour chart? If the answer is yes, go for it and use that proper risk management. All right, guys. Good job, everybody. So we didn't really get into any trades today. We are at we're at the very beginning of the trading challenge. Let the trading challenge begin. What will April look like? 24% in March, 12% in February, in March, right? 12% in March, 24% in February. Doing well. Let's see what April brings. Let's see what April brings. Trend and momentum. Trend and momentum across multiple time frames. That's what gets us consistently profitable. Just follow that. Follow that rule. Let TrendCloud be your eyes on the chart. You got yourself a consistently profitable system there. Oh, yes, that's right. Yeah, thanks, Kazi. Thanks for reminding me. So we've got a request to do like some Globex prep on Wednesday. And what time are we thinking, Kazi? Wednesday, like 6 o'clock or something, or do some kind of Globex prep on Wednesday, like Wednesday evening for the next day, just to take a look at the charts and see what's going on in the middle of the week. Yeah, let's start doing it. Let's do it. I'll send out an email. We'll make it official, and let's say, yeah, 6 Pacific time, 6 Pacific time, 9 Eastern, 9 p.m. Eastern. Okay, do a late night Globex prep. Okay. All right, let's do it. Let's do it. Let's see if we could. So we'll do 9 o'clock Eastern, 6 p.m. Pacific. Half hour. Sounds good. I'll send out an email. Let's do it. Let's see what kind of crowd we can gain. Sounds good. Couple of trades setting up. Yeah, it would be nice. It would be nice to set stuff up, like 24 hours in advance. So that'll be our time to see if we do have anything, setting up there. Dow, boy, the Dow just took off. Micro Dow never retested. This thing just kind of took off to the downside. Okay. All right, guys. That's it. I'll be back tomorrow, 9 a.m. And then we'll do a Globex prep, 6 p.m. Pacific, 9 p.m. Eastern, and we'll check it out. We'll see how that goes, see how everybody likes that. All right, everybody. Great job. I will see everybody tomorrow. Take care, everyone.